And we are live, the Prospero.Ai stock market live stream. Welcome, everyone. I see we got a few comments even before the stream started from Wolf. Guess you're not going to make it today, but thanks for joining in early and letting us know that you're excited to watch it later. We got a lot of good topics to get to today. If you've watched our past live streams, you probably know that George has been in an epic battle with his new setup. His camera, for some reason, refuses to operate when the sunlight is very bright. So we're again having troubles with that today that George is trying to solve. But if he can't get it working, I think he's going to go into his other. I know Joseph over and over, right? But if he can't get it working, he's going to be in his other setup. Thank God he has a backup plan. Um, but oh wait, George is calling me. Let me talk to George real quick. He hung up. I think he realized that I went live without him, but he should be joining in any second. I'm going to get into the topics in 1 second. Let me just tell George that I went live. Yes. Okay. All right. So after the market was pretty rough yesterday, it was the worst day in the Dow since March of 2023. So almost a year. We're getting a little bounce back today. Maybe we could take a peek at the SPY and QQQ net option sentiment in Prospero and see how they're looking. Okay, so the QQQ net option sentiment today is at 47. I believe yesterday it was down as low as 33, and the SPY is at 46. So the QQQ is still above the SPY. The SPY got down to 43 yesterday, and it's at 46 now. So both slightly higher, a little bit of bullishness. We'll ask George his opinion on that. I'm curious to ask him after CPI came in hot yesterday, if that's a ongoing concern we're going to have, or if this is just a blip in the markets. Like always, feel free to comment your questions that you want to ask George when he gets in here. More stocks we're going to talk about. Lyft and Uber both had news events, both very different after market yesterday. It's the first time I've ever seen a company misreport their a part of their earnings this as bad as Lifted. So we'll get into that and how it caused the stock to jump tremendously. Another story we're going to talk about is Mark Zuckerberg. So he filmed a video talking about the differences between the Meta Quest 3 and the Apple Vision Pro, which is kind of odd to see a CEO directly talking about a competitor's product, in my opinion. I don't think I've seen something that direct before. Maybe a worrying sign, maybe a good sign. I don't know. We'll get into all that. Nvidia hit a crazy milestone today. They became the third largest USA company. They passed Google today. If they close that way, it'll be the first time they close that way. They passed Amazon yesterday. So in 1 week, they passed Amazon and Google. And it's kind of funny, at least in my mind, I feel like everybody thinks about NVIDIA as an up and coming company, but I think people need to start thinking about them like they're here. They're the third biggest company in the USA. A lot of their potential has to be priced in at some point, right? 1 hour of sleep from Wolf, and he's here. Let's see if I got this new feature down. There's your comment, Wolf. Thanks for joining us. If you're tired, go to sleep. We don't want to keep you up here, but I know you love these streams, and we love seeing you here. So you're a zombie. Why'd you only get 1 hour of sleep? Isn't it like 9 o'clock where you are? Shouldn't you? So you've been up all day, or are you not? And where were you? Where were you? Poland or somewhere? I forget. Last stream on Monday. By the way, if you haven't, for the people that are in here, we filmed an AMA live stream yesterday where we answered a lot of questions, not so specific stock related questions. They were more just general philosophy, strategy, Prospero.Ai. We filmed that yesterday. It's on our YouTube channel still under the live stream tab. Go check that out if you want a little bit more of a general questions that you could have about Prospero. But on Monday, we talked about a story about how Jeff Bezos was selling billions of dollars of Amazon, and it's funny because whenever we post those shorts on our social media social medias like TikTok, Instagram, whatever, um, it seems like people always don't get why that's a bad sign when like a CEO is selling shares, even though they may have so many more. And George always sides that it's like directly a bad sign. There's no other way to slice it. So it's funny whenever we post those, it causes some drama. Wolf. Wolf is in Poland, Austria, Czech Republic, Poland. Oh, you're going back and forth all over Europe, huh? Doing a lot of traveling. Uh-oh. I see George. Oh, there we go. Let's see. Let's see if I can make you big.
This is the last day that we're gonna mess around with these annoying video things. I'm almost done.
Uh,
It's that we were so close to getting it again. I had fixed an error and then it was back to my old brightness problem. But anyway, we shouldn't waste any more time on the video stuff. I apologize to the people that come on time, and me being late. I don't want to do that. Um, but let's jump in. I mean, I think the good news, if we can, is that your rewards for following Prospero continue. The 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 camera setup is very complicated. Um, it's but like yes, we're close to 500% above the S&P on our newsletter picks, which is pretty cool. And our model portfolio actually this week crossed over. It's at 52%. So obviously we are nailing everything here, and a good reason to be patient with us during some of these growing pains. But it's a very interesting day for the market. I'm definitely planning a move on my portfolio. So we'll check that out.
yeah, so I think the first topic I really want to talk about is kind of playing in right into how you usually update us on your market view. But we got CPI yesterday, and it came in a little bit hotter than expectations at 3.1% year over year. Expected was 2.9. It was one of the worst days in the market in a long time. Um, do you expect that to have a lasting effect on the market? I mean, we see it kind of rebounding today, or could it just have been a blip?
Yeah. No, we already see it rebounding. So I think that I think we just there's a few important things and we talk about it all the time. There's there's model adjustment, right? Which is I think what we saw yesterday, which is just hey, because inflation came in a little hotter, these models are obligated to model stocks down pretty immediately because they're updating their assumptions, right? With this inflation reading, then they have to have certain forecasts lower for interest rates or interest rate cuts or whatever. So that is just what we saw was, I would say, with the reaction today, a very clear instance of just model adjusting, right? So I think the other thing there is that uh, there's other things that end up coming into play at that part. And sometimes you see model adjustment plus an additional trader's view that this model adjustment means we're going to hit a larger bear correction, et cetera, et cetera. I don't think we saw any evidence of that. That's the good news.
Well, speaking of model adjustments, this next story is one of the craziest misreporting of earnings that I've ever seen in my short tenure of being watching the stock market. So Lyft had earnings yesterday, and they reported an error in the earnings where they reported their margin growth as being 500 basis points better this year when it was really 50, and it caused the stock to shoot up 67% before they corrected it. And Lyft was still up like 30% today at some point, so they had amazing earnings. But I want to get your thoughts. Is that, can investors sue them for releasing an earnings that has a blatant error?
Uh, Definitely, but it's a lot harder if the stock went up. Like, like for those that don't know, like legal terms or how these kind of things work, like you have to have, um, there's got to be, a breach or some kind of like law break, um, and then there have to be damages, right? So clearly reporting an error like can be considered like a breach of your contract with your shareholders and your responsibility to be better than that, right? But there's not really damages, right? There's not damages. The one thing where there could be damages is someone could say, oh, I sold my stock and missed all that upside because I assumed the stock would tank, um, after they admitted this error, right? So that could be something that creates some theoretical damages there. That's a little harder, especially if you're talking about a class action that tends to be like there has to be a lot of damages and kind of like proof of a lot of damages, I would say. So, yeah, I think one of the things there, that's very clear, uh, is that I don't really see damages there, but it's sloppy and it's weird. And like the conspiracy theorist in me says, uh, maybe they wanted to have a reaction like that. So that error was a nice way to both make a story and whatever. But that kind of thing is way too like it's completely unsubstantiated. I will admit that. But that's like always a conspiracy side to me.
So it's funny, you think it could kind of be a accident, quote unquote, versus actually being a mistake. We got a comment. Lyft and Uber employees are threatening strikes and wages and better wages. It's funny. I also have a story about Uber where they just announced they're going to do a $7 billion share buyback, which was also surprising to me because Uber has been like non-profitable for years and years and years, and they just went profitable, I believe, last year. So for them to have like all this money to do a share back buyback already is like really shocking to me. So I guess the
Think
question
like
I'd pose to you is like, do you think they were manufacturing not being non-profitable for so long and they just could flip the switch at any point?
That's a great question, but I think you're wrong about like with the word manufacturing, right? Because like if you look at Amazon, right? Amazon had a very long time because it was profitable, but that wasn't because they were short on revenue. Like profitability is something that's always managed. Like it's always a managed story, right? If you're a growth company, and it's very interesting, we actually just saw this transition with Meta and it was very well received, but not always because like if you start say giving out dividends or um or share buybacks or things like that, you're kind of also saying that you don't have enough ideas. You don't have enough innovations. And there's a point in any company's maturity where it's all right to say that, right? And the market reacted really well in the case of Meta. So it's not necessarily something that uh, is categorically bad, right? But um, I would also say that I would also say that uh, that's not great for every company, right? I would say that if certain companies, started to basically say like, oh, we're going to do share buybacks or whatever, we're not going to like fund innovation because like basically like whether it's R&D, that's more like looking into new ideas, or even something like capital expenditures, that's like, hey, we're building a new factory that's going to like save our costs, right? That's stuff that's going to eat into your profitability in the shorter term, but work well for you long term, and that's like funding ideas, right? So it's all very managed exactly how profitable a company is, and that's even just like right down to like for the more expert accountants, like taking sort of like what's called like non-cash charges, right? Where you're like uh taking down the value of your assets, right? Or like an example is like if you owe money on leases and you renegotiate the lease, that's like a non-cash, benefit because that's actually going to take away some of your, the ongoing debt payments that you'll have to make. So it's going to affect how your solvency is and you're viewed like that. And there's all these kinds of things that aren't going to show up on your bottom line necessarily, Sometimes they do. Sometimes you're just gonna like take an asset devaluing, right? And that's going to end up eating into your profitability because you're basically saying we're going to eat this charge now, even though it's like not as it's not cash going out the door. That's actually why some companies and people care about free cash flow versus earnings, right? Because you take that like non-cash charge, it's going to lower your profitability, but it's not going to lower your free cash flow, ultimately, like how much the cash the business was generating. So all of these are kind of the complexities in analyzing businesses. But if there's one thing that's for sure, the amount of profit that a company is showing is extremely managed, contrived, whatever word you want to use. I will be right back, but I'm listening for your question.
Okay, we did get a question in the chat from Joseph. He's asking you, could you share how you've optimized risk management within your AI trading system to mitigate potential losses and maximize returns in volatile market conditions? We also
I'm
got a
not
comment.
really sure how to answer that question, to be honest. Because just to be blunt, it doesn't really encompass very well what we actually do at Prospero. Um, right? Because like, could you share how you're optimized within risk management? It's like, no, we're not really risk managing, right? I risk manage when I make my newsletter picks and I spread out sectors. I do things like that, right? Um, but like Prospero isn't a risk manage like Prospero isn't like a portfolio management risk management tool, right? As we kind of describe all the time. There's like picking stocks, right? And that's really just about looking at metrics, looking at things like the institutional metrics. And then there's portfolio management, which is a whole other animal that I touch in newsletters. The app, the signals, they don't touch that. And the reason they don't touch that is like portfolio management is so specific to your risk profile, the amount of time you have to spend on it. It's variables that giving generalized recommendations for, that wouldn't be very responsible of us, which is why even in our paid investing letter, I just basically say this is how I would hedge at a high level, right? So what I would basically say to that question is that it's just like the signals manage risk in very overt ways, right? We manage the risk of the trade going the wrong direction on you quickly with net option sentiment. We're basically telling you exactly where institutions are betting in the highest risk, highest levered options, right? So that's a risk management tool we're putting in your toolbox, right? Profitability and growth metrics, we're basically showing you how those compare. We give you indications of how those are adding up. Upside and downside breakout. Those are basically looking at like the long-term options markets and how much net bullish sentiment there are in like the options markets, analyst ratings, price targets, price momentum factors. That's all an upside breakout and downside breakout. There's some nuances to how those work, right? But the metrics are overt risk management tools. Like there is no AI trading system for one. We don't trade, right? I take the signals and I build, my model portfolio on top of it. Or the newsletter picks, but that isn't an AI trading system. Those are signals that use very great linear equations that we've proven out over the many years that use AI on top of that to figure out how to weigh new information, to figure out how to weigh the accuracy of the whole system, anticipated accuracy, past accuracy, how to gather new information that's most productive for the improvement of certain signals or efficiency of certain signals. That's the AI part, right? But when it comes to trading or investing, I'm just using those really smart linear equations with high tech enhanced AI enhancers. And then I'm just doing the same thing that any portfolio manager would do and adding my own, whether it be trading system or investing, value investing for the newsletter picks. I'm basically taking principles of value investing, layering them in on top of the signals. That's it. So I would say we love like love the question. But we also like to be very specific about what we do and what we don't do, right? And if you're talking about maximizing returns in a volatile market, like that's what the newsletter picks are. But we're not using AI for that. I'm teaching how to do that in the newsletter picks.
Maybe we could also mention, and George, you could build off, whatever you want to do after I say this. But like, if you're looking for volatile stocks or stocks that could be viewed as more risky within Prospero, you have to look at the signals like short pressure, dark pool, profitability, and like kind of form your own opinion. But those could kind of show you what riskier stocks would be within the market.
He's asking something different. I think he's asking like, how we manage a portfolio to get good returns in like this volatile market. And that's basically the newsletter picks, right? Everything I do in that, I'm being like, this is how much long, this is short. I'm managing that portfolio actively. I'm actually saying right now in this volatile market, every week I've been starting out pretty much just as many longs and shorts. So that's an active risk management strategy, right? And I think I'm well suited to do that. That's not something that I really think should be automated, but that's it. That's the answer. But it's not about AI. It's about my portfolio management strategy that isn't necessarily even for everyone. It's just an example of what I would consider best practices for people that, understand how to go long short. But even for other people other than that, like at the bottom of our paid investing letter, we tell people, hey, if you're only long, this is how much SQQQ hedge we'd recommend. And that's us just making different strategies available for people to manage risk.
Okay, and yeah, Joseph said he liked your answer, so that's good that you helped him out. Next story we're going to get to is Mark Zuckerberg released a video on his own Instagram. You guys can go and watch it after our stream. Um, but he released it talking about the Apple Vision Pro, and he directly was like comparing and contrasting it with the Meta Quest 3, and basically just giving his pitch as to why the Meta Quest was a better product, better value, so the Vision Pro is $3,500 and the MetaQuest is $500. So big difference in your bang for your buck. He was trying to point to there, but I can't remember a CEO like directly talking about a competitor's product. Like if Elon Musk just made a video talking about Ford's EVs, it'd be kind of weird to me. Do you think he could be worried and like feeling the pressure of the competitor of Apple entering the market? What's your thoughts on Mark Zuckerberg doing that?
Absolutely. And I'm hearing a lot of like whispers of good reviews and people kind of like blown away with the Vision Pro tech. So that's something that I'm watching and I would find very interesting. But like there's kind of a rule in marketing that goes something like this. It's like um don't give your competitors air, right? It's like a classic marketing mistake to use your platform to talk about another product, no matter what you're saying. Like giving it air, like is a pretty glaring, like insecure statement. Um, and I will say that's the funny thing about Mark Zuckerberg, that like as like robotic as he is, like and how he presents, I would say it all of his like worst decisions, and I don't that I wouldn't call this like a terrible error, but it is like kind of a basic marketing error. Like seem to come from emotional places, where it's just like the meta when it's a metaverse, that's like the emotion there is just him getting excited about the metaverse and like I would say going way too far. And this is like a classic insecurity thing that kind of violates basic principles of marketing. So yeah, it's a weird look. I mean, it's a really cool product. I don't know exactly what he said, but it's like he's probably wanting to like hammer on like the value and everything like that because that's the only leg he really has to stand on.
So the Prospero signals have been so bullish on Meta, and they've kind of been a little bit more sour, just less bullish on Apple generally. Obviously, Apple has a lot more segments, and so does Meta than their VR headsets. But do you get any kind of feel as to who is being viewed by the market as the winner in this space right now?
Well, I think it's way too early for that. But I'll say a few things in response to that. Like for Apple, the question and what people are going to want to see, and I think we talked about this on a different stream. What people are going to want to see um, is not will the early adopters get it and like it. That's assumed. There's such an Apple cult that I don't even take those reviews that seriously. I'm just commenting that they're there and that some people like seem to think it's really cool. Um, but it's totally expected, right? That's the reality. So, what would I need to see? I would need to see like people in my network or just like more around that aren't the classic like Apple, we buy any Apple product, blah, blah, blah. If I see that, like that, I'm going to be much more interested in terms of forecasting them up. And then in terms of Meta, like I'm bullish on Meta overall. I think they have like their VR headset is kind of just an example of their more, I think, mass market appeal. Like just in the way they build their products. It's better is like a numbers game is a better thing to have in a business. Like categorically. Um, so I would say that Meta's got a lot of these touch points and a lot of like these like smaller expansion points that I think are adding up and make, us and a lot of other people kind of excited about. Like Apple kind of needs this. But if they do follow through and it does expand, it's going to be huge, right? So the question is like, is the market determining who wins this? No, not at all. Because if they thought Apple was going to win this, the stock would be doing much better right now. And if like Meta was a winner, I think we would also be seeing it, trading a lot higher. It is doing well, but I see very few people mentioning their VR headset as a reason that Meta's doing so well. So I would think that's a bad conclusion to draw. And like, it's not really even why I love like them. I've talked about them as an AI play. Like one of the things we talk about is like Apple is the lowest sales growth in the Magnificent Seven, and Meta after Tesla and Nvidia is third, right? And I believe Meta's been third almost like for most of the quarters in the last year or so. So it's been pretty consistent. So that right there, it is like we could talk about Vision Pro, VR headset, Meta's AI applications. We could talk about that all day long. But the brass tacks is that Meta's growing a lot, especially for a company its size, and Apple isn't. And I think that's the only story that really matters in relation to those companies.
So let's spin to a company that's definitely viewed as the winner and the outright winner, by the way, NVIDIA. We talked on Monday how they passed Amazon in market cap, and today they actually passed Google. And if it closes that way today, it'll be the first time that they are the third biggest USA company. And seeing this happen, it kind of made me think about the way that NVIDIA is viewed by maybe it's retail investors, maybe it's all investors, but in my mind, NVIDIA is thought of as like an up and comer innovator, so much potential. But I feel like, with them being the third biggest company in the USA, like that's been realized. Like they are that they have done it. The market cap reflects it. And maybe that's a problem with going forward, how people are thinking like there's so much potential. And obviously, I'm not saying they can't grow or their stock's not going to do well, but it just makes me think that there's been a lot priced in.
I agree and disagree with that. I think that like obviously when we talk about Nvidia, there's just like you can't look at their business and say like there's risk involved in the amount of growth that's priced into it now, right? Is that too much? There's fair disagreements there. Like, or I should say, is it overpriced? There's fair cases to be made. But it is just like a fact that there's a lot of growth priced in. The fair disagreements are like, are they going to hit that growth or not? And anyone that like pretends to know that answer is like an idiot. Because that's just not factual. There's too many unknowns. China being the biggest unknown, and how they're gonna like continue to react in this election cycle. So anyone's full of shit if they tell you how this like the growth story of Nvidia is gonna play out. But the other thing that I actually disagree with you a bit on is in terms of them as an innovator. And like one of the interesting things, like, let's look at like Meta as an innovator versus Nvidia, right? Because those are both like we just talked about them, right? We just got some cool little innovations in terms of, I would say especially what we've talked about, like PyTorch and Llama. PyTorch is kind of like their open source, data science library that kind of started eating Google's lunch. I got a lot of people using it. Llama is an open source LLM that, also is creating a lot of people using it because it's unlocked, unlike ChatGPT, right? There's some security reasons, but like, who wouldn't want an unlocked LLM, right? So if I talk about like Meta's best innovations right now, I would call them like kind of more basic, right? There's nothing like it's a great idea, but there's nothing that like complex or innovative about it. Like it is an innovation, but it's not like a huge like thing in terms of like the complexity and their ability to generate new ideas. It just is a new idea that's effective, right? I would call that very different than Nvidia, where like everybody and their mother is trying to duplicate what it like, whether it's like Amazon, Meta, Google, all of these very well-funded companies keeps trying to do what Nvidia does. And just so people know, well, we've talked about this a bunch, but essentially what Nvidia does that makes their chips must buy is that they actually use Taiwan Semi's hardware, right? So what's special about their chips? It's actually the software that's built to go with the hardware that makes these chips and these chipsets run faster to a point where just like Nvidia chips beat everyone's. So that's why that's why it's like a interesting touch point for us in China. We're just like, even China that is doing so well in AI has so much manufacturing. They have like basically us buying like, whether it's Taiwan, like semiconductors from their area of the world. Um, they still, and they're willing to use like government grade tech to help businesses. They still can't build what NVIDIA builds. And that isn't just a solo innovation. NVIDIA continues to enhance this software, do things to stay ahead of people. They've got a really cool project called Levels that actually is kind of designed to move more like, right now things like neural networks run on GPUs. They're trying to bring more like database operations, ETL pipelines, which is how data is ingested. They're trying to get more and more of that on GPUs too. So they continue to innovate there. And they're a very interesting company from that standpoint, in the sense that like, and that's why like them and Tesla are the big growers in the Magnificent Seven, because those companies keep innovating and innovating in broad, like I would say very novel ways on an ongoing basis.
Yeah, and so I mentioned how they passed Amazon, and this is just a side note. Jeff Bezos sold $2 billion more of shares since we last spoke, so the total is now $4 billion. And I wanted to mention that in case any of those commenters that say it's not worth mentioning when the CEO is selling shares, he's still selling them. So I don't know how many billions it'll take before it becomes worth mentioning to some people.
I mean, it's just one of those things. Um, it's one of those things that we continue to get these funny comments online where it's everybody just like making the same mistakes. And even when we state this in the video, like, hey, it's a bear sign, he doesn't need to sell these shares. Like, people just don't seem to get it. So we're gonna try it one more. We're gonna try it one more time for the people that like don't. It doesn't matter how small of a percentage of his wealth is. It could be small or large. It doesn't matter. It doesn't matter that it's a drop in the bucket for him. It doesn't matter. None of that stuff matters. He doesn't need to sell these shares. The only reason you would sell these shares, the only reason Bezos would sell these shares is if he thinks the stock price is going down. And for the millionth time, it costs taxes to sell shares. And loans against the shares, which Bezos could get as much, billions and billions of dollars in loans based on the value of his shares, no problem. No problem at all. So why would you sell it? Because he thinks it's going down. Because if he does sell those shares, he's paying taxes on them. So you have a debt instrument that is actually a tax relief generator. And selling these shares, that actually is a larger tax burden. And capital gains taxes are one of the most unescapable tax burdens that exist. There's a lot of loopholes for a lot of stuff, not really for capital gains taxes, right? Which is what selling these stocks would be. So he really, really only would sell these shares if he thought the stock price is going down and for no other reason. And hopefully we don't have to keep explaining this.
Yeah, I thought it was just funny when I saw he sold more. I got a thread update from you today, and it was you were taking a short position in SWX. And one of the things you mentioned is how it went ex dividend. And I was wondering if you could explain why that would be a bearish event for a stock.
So dividend means that you hold to this date and then uh, you get the dividend payment. And if you sell after, you don't get the dividend. I mean, you've already gotten the dividend payment. It'll still go in your account, right? Some rules are different, but generally that's the case. So it's dangerous for a stock, and why I shorted it is I was like, oh, it's going to go ex dividend. Our signals don't really like it. Basically, there's a big reason if a bunch of people are just basically holding to get the dividend, like there's an easy way to sell. We always talk about like the world adding up, right? And some kind of macro view. And we talked about this adding up, right? We've seen our net option sentiment go down. It goes ex dividend. To me, that paints a very clear two different data point story that people expect this ex dividend date to go poorly for the stock. Good for a short.
Okay, and we are getting into our last topic. So before we go to the model portfolio, so if any of our viewers have any questions, please comment them now and we'll get to them. Um, this one's kind of a funnier topic. So I saw this article about how Disneyland characters were trying to unionize. I, I thought it was just funny because thinking of like, the people working at Disney forming a union. But I wanted to spin it into kind of, building off of it. Why do companies fight or not like their employees unionizing? What does it actually like? Does it impact the business?
So, I mean, there's like a very practical side to like, there's basically a case study in the damage of unions when you look at auto workers. Like, one of the big drags on American car companies are like, I would say, not only unions like getting these higher pension rates, like getting a lot of things that, like, to be very clear, like businesses should be able to support higher pensions, like all of this stuff. But there's the other side to it where it's just like not only are these higher pensions, but a lot of times the unions were preventing automation in these factories, right? So they're hurting the business in two ways. They're just being like, well, we don't want you to automate, but then we want these high pensions. And that doesn't make any sense because the pensions are getting paid for through the profits of the company. And if you won't let them innovate and do things like, especially when Japan is automating and just basically able to offer lower prices and higher quality as a result, you're kind of base level hurting the company. So it's just like, there's a side where it's just like people should be able to unionize, but there's the other side to like, yeah, it is damaging if unions get so powerful that they hurt a business's ability to compete. They hurt a business's ability to profit, right? But there's both sides. And honestly, it is the most like it's the most complicated um topic, or one of the more complicated topics that I can think of, right? Because I'm a big advocate for employee rights and treatment and everything there, right? So, how do you actually manage that, right? How do you actually manage this idea of like, okay, we like want to protect workers' rights and we want to create good treatment for workers, but we don't want to give a union so much power that like they create a non-viable business. Um, that's a tough question. I don't like honestly for me and how I think about that in my business is like I would never overhire, right? I want to hire enough people that can do the jobs. Um, but only that many people. I think when you start to hire too many people and you start to expand, you need to contract, all that stuff, there's all this like signaling and complexity there. I think that's the real answer. Don't hire too many people. But what makes it so complex? You could say like a place like Ford, GM, they've already hired too many people. They've already, made too many pension promises, et cetera, et cetera. These unions are like very powerful. So where do you go from there? I don't know. I don't envy anyone that runs those companies.
Yeah, and Wolf is probably right. People are greedy. No matter if you're the business, you're the worker, you're a union, no matter who you are, everybody wants more. The grass is always greener.
Yeah, that's a good point. And it's just like that's what makes the issue so hard, right? Where it's just like, yeah, most CEOs are overpaid and it's crazy. Um, but like, yeah, part of this is like unions when, many years of unions just like conducting good negotiations and, to the point of the other extreme is like, no, this is like there's a reason there's a non-viable business, right? And it's the unions basically like taking so much that they've hurt the business.
So I think you mentioned when we started that you might make a big switch up today in the model portfolio. I'm interested to see where we go. Is that still your view?
Let me get a live look. Motion sentiment 50 on GQQ. Yeah, that looks like what I'm going to do. SPY 44, that's a little lower. Okay, I think we're time to do it. Time to do this update. Yeah, SPY is a little lower. Um, we will look. I will say we will look at kind of our portfolio construction right at the start. But let's see. I'm getting everything set up.
Seems like a switch in the past, few days, week or so, where the SPY net option sentiment was above QQQ for like the most of this year so far, right? Until recently.
Yeah, it's getting more Yeah, it's getting more conservative again. It definitely is interesting. In terms of like how much people are like hedging with the SPY. All right. Let's take a little look-see at this. All right. Getting into the model portfolio. Oh, actually, well, let's do it the old school way. So we have 68 longs. Oh, thank God. Our quest to cut down these positions, we were getting to like in the 70s. It was just too much. 68 longs, 68 shorts. Look at that. That was accidental. Um, so I think we definitely want to go more long given this. So we don't need to like be too aggressive on these, but let's take a look. Yeah, I'm seeing some concerning numbers right off the bat. Um, Actually, let's take a look at the technicals on this for a second. Yeah, 30 minutes is looking very strong on SPY. I feel like we always get this wrong. Very strong on both of them. We're going to look at 15, a little dip, but back up. Yeah. Let's go a little longer. Oh, actually looking a little down on that. Let's look at QQQ. Yeah, a little down. Let's look at the daily. Down on the daily there. Down on the daily. Yeah, I think so. All right. One other thing, I want to look more at like 2 hours on that. Wow, it's kind of funny. We don't normally see like this much like exact. Oh, but the 1 hour, this is all over the place. This is a tough thing to read. But given everything in the behavior today, I still don't mind swinging a little more long. But this is enough that like it's definitely not enough to like insulate us. Let's look at this. Do we want to close a Navi position? Actually, because I'm thinking about this. Oh yeah, we're definitely gonna close one of our Navis. I'm sorry, but I think I'm gonna do that. Can you check how many Navis we have open in the um mono portfolio? We're gonna close one. No,
right
actually,
now.
it's going down. We're not in a big rush. Actually, we might give Navi one more day. But we're doubled up. I don't know. I want to take a look. We have this one that's very close to even. This one's a pretty big win. We're gonna think on it. We're low on time. So we're going back to what we were doing. We got distracted. ODFL. That looks like we definitely want to get out of that. All right, getting out of that. All of these are industrials. Oh, there. MLM is fine. But we are getting out of ODFL. I didn't eat lunch today. I'm so hungry, Stephen. I've been fighting with that camera.
Yeah. We have some comments in the chat. I think I have my first fan, George. Wolf is wishing me a happy Valentine's Day. Thank you, Wolf.
Oh, there you go. No,
Spiky
yeah,
dude.
nobody asked. Did anyone ask you your Valentine's Day plans?
I think when you were gone the last stream, I said I have no Valentine's, so I'm just gonna sulk on my couch alone, probably. But
Yeah, who knows?
Spike.
If we have, if we have any female watchers that are interested in Steven,
Yep,
you put your phone number right here.
up for grabs. Up for grabs. Spiky dude.
I'm assuming female. I don't want to make any assumptions about
You
your
can assume.
interests.
You can assume that way, George. I have no problem.
Uh,
Uh,
right. What's
Spiky
going
dude is
on with which
Spiky dude is
SBC? I
asking.
closed Steve.
Sorry.
No, go for it.
Spiky Dude is asking if there are influencers or reputable public traders that would benefit from Prospero, but I know you're just going to say everyone would benefit from Prospero for that.
Got it. That's a great answer. See, you barely even need me anymore. Yes, everyone would benefit. It's meant to support any strategy, right? And I actually think influencers especially need it because I see a lot of them like giving people comfort that they shouldn't be giving them because they just actually aren't as good as they think they are. And looking at like something like Prospero that will like help them see potential holes in their strategies is so important. I always laugh at this. Oh God, Saber screwed us again. I always laugh at the Saber thing because I always think of like the office and that whole problematic merger. Like one of our, and we'll see if he's right. One of our very loyal users warned me about. Oh God, I knew this was a bad idea. I'm gonna hold it. These small cap ones, they burn me every time. Well, not every time, or I wouldn't do them. Yeah, Mitch was right. He warned me about IMAX, and I didn't listen. I'm definitely going to close IMAX. Mitch was right, and I didn't even get back to him. Look, Steven, you have like multiple fans.
Yeah.
They're all vying to be your fan.
And Joseph is saying this is the greatest show ever. So uh, glad this Valentine's Day episode of Prospero.Ai
Yeah.
Live is going so well.
I'm biased. That's a huge compliment. I'm biased, and I wouldn't call this the greatest show ever, but I very much appreciate the compliments. All right, DRH, we want to flag because I'm putting it on notice. I mean, DQ, we almost have to drop. I think it's got such a high net option sentiment. Yeah, we're definitely 4 hour. Yeah, we got it. We can't even think about this. It's just too high. We got it smart. All right, that's what we're getting out of. Let's see what we're getting in. I'm gonna just take one more look because it's not a bad idea. CPRI. Oh no. Yeah, CPRI. Because we do want to get out of more things if we can. All right, this is a great thing. I'm glad we kept looking. We might actually be out of 10 that one. I want to scan one more because we wouldn't mind getting out of more of these. What's going on? MOS and Wish. And then we got to get out of here. Oh, damn. I just forgot one thing that I wanted to check. Oh, yeah. MOS is a great to get out of. Are we winning that trade right now? I think we're going to get out of it one way or the other. I think we're probably winning. What else did we say? MOS and Wish. You're still going up. We're staying in there. Okay, I think we're good on that. Oh yeah, one other thing we wanted to check.
MLS is a
NWS.
win.
What?
MLS, you're winning.
Oh, News Corp. That's hilarious. I didn't realize I was shorting my girlfriend's company.
Don't tell her
Yeah,
that.
in your face, News Corp. It's actually really funny. She calls it News Corp. I'm just like, it's not the right name of the company. But she's dug in on her. It's News Corp to her. No, we're keeping that. I'm Jim Barnum. Get out of here. We got to do the new filter. Quit keeping us in this old work, Stephen. All right, I'm going to need your read on QQQ and SPY and option sentiment very soon.
Gotcha.
Here we go. Oh. Need food. Really shouldn't be making important portfolio decisions on an empty stomach.
That's funny. Can't go to the grocery store or change your portfolio without eating.
Well, what's going on here? Did Meta get filtered out? Yeah. Meta's gotten, well, look at that short pressure go up. That's interesting. That is definitely interesting. LRCX. Can't ignore it anymore. Is it time to get back in Tesla? I bet Tesla went back in the other direction and we're gonna feel stupid about this. I haven't been watching it, but I bet. Yeah. We bailed too early. It's all right. We're gonna get back in. Can you tell me what's going on with the trend, net option sentiment trend on Tesla? Well, what's going on with Stryker?
It's at 91 right now. It was at 87 at noon. It kind of a very neutral trend. It's hitting, but it is hitting higher lows though along it.
We're getting back in on two. How many NVOs do we have open?
That's a long.
Yeah.
We have two open.
I think that's probably enough. I think that's good on a long, I think. Maybe another snow. What's going on? How many Googles do we have open? Googles. I think we might have gotten out of that. Yeah, I want another one. I don't even care.
Yeah, I just see one.
I think that's gotten way too beat up. All right, that's good. Now we exited a lot of shorts, so we don't want tons. And we have 3 minutes, and I do want to try to finish on time. I don't need to punish my stomach here. And M chip's down here. All right. Did we get into FWRD yesterday?
We did not.
Are we in it at all?
No. Oh wait, no. There is one. There's a short. Yeah, there's one short.
We might actually want to close it out. Are we winning or losing that?
It is a win.
Oh, wow.
Oh no,
so
it's a
close.
loss. It's a loss. Sorry, but it's like right on the.
We'll give
It's
it.
almost
We'll give
neutral.
it more day. We'll give it one more day. Live to tell another tale. Do we have any eyes open? We definitely might want to get the eye closed.
We do have one eye open.
Are we going to win on that?
No, it's a loss.
God, what's wrong with us? I think we have an SQM open, right? I do like this trend. How about X-ray?
SQM, no. X-ray. X-ray, yes. It's a win.
Well, we'll just leave that. Any VLYs? We've been like in and out of Macy's.
Two VLY.
Two?
Mm-hmm.
Do we want to open new Macy's? Are we wins or losses on this?
Those are losses.
We're going to close one. Four. All right. We're going to speed up on this. Okay. Brookfield Renewable. This is interesting. We're going to take a flyer. Actually, tell me BEPC what the trend is on that.
Downtrend, net option sentiment at 21 currently. Good downtrend.
How about VAC?
VAC, net option sentiment's at 8 right now. Is at 50 before, hitting a new low.
Let's get it. Do we have any open PTCTs? I'm always in and out of that. Hard to know. Oh, it doesn't really matter.
No, I don't think so. I don't see any.
All right, well, we're gonna get back in. LSXMK. I think that's a change. Oh, what happened to Maxim? Did we get out of the Maxim?
What's the ticker on that?
MAXN. Oh, Jesus. It's up again. I think we might have held on to it, much to our detriment.
No, I don't see any.
Okay. Oh, yeah. I think we were considering getting into that yesterday and we didn't. Thank God. I think we're good to go on this. My stomach needs us to be. Here we go. I might want to add Tesla as a newsletter too. I'm going to do that. Oh, what's going on with
QQQ and SPY?
Mm-hmm.
QQQ finished at 50 and SPY at 45.
Okay. Yeah. Oh, yeah. Happy Val. We just talked about plans, but happy Valentine's Day, everyone. I hope you are all doing right by your loved ones. No, we have an open PTSD. That's funny. Well, all right. I think. I think that should be everything. Oh yeah, I was actually just gonna like take a bit of a deeper look on Tesla and see if I wanted to add it. I really like what it's doing in the technicals. I want to just see. I want to take a look at it in Prospero myself. Um, Higher dark pool. I like that that short pressure is down. Yeah. Downside breakout is going up a little bit. Um, but yeah, I think we're gonna add it. I like this bullish turn. Oh God. going up after hours. Like a lot. What the hell's going on? Does anyone know? Anyone?
That's interesting.
Something's going on. Do you think it's because we're talking about adding it?
Has to
The
be.
hordes are ready to invest now that we're talking Tesla again. Wait, did I say long? I think everybody knows long. I should say long. All right. I think that's everything. Thanks, everyone.
Thanks for tuning in, everyone. Happy Valentine's Day. We'll be back next week, same time, same place.
Thank you.